Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because this is one of those concepts that took me a long time to learn, but once you see it, you really can't unsee it. And even though so much money has been lost already during this Bitcoin summer chop, I think it's only going to get worse over the next few months. And of course, this is all a result of the constant narratives being posted all over Twitter and YouTube. For example, I was seeing this headline being spread all over the place. Crypto wallet holding $2 billion of Mt. Gox Bitcoin sends test transaction as distribution continues. And of course, everybody started panicking, saying more selling is on the way. Maybe that makes you tempted to sell your Bitcoin so you can buy back in lower, or perhaps even short the market. And then within the same 24-hour window, I started seeing this headline and narrative being spread all over the place that the Bitcoin miners were capitulating, were close to record high hash rate, and this is a possible price bottom. And of course, we know the miners are very important for Bitcoin's price. When they're very profitable and selling a lot of Bitcoin, that tends to suppress price because there's a lot more Bitcoin being sold. But when they're capitulating and shutting down their rigs and have sold all their Bitcoin, that tends to be quite bullish and tends to mark local bottoms. So when you see this being spread all over the place, you feel tempted to be short-term bullish, maybe even open a leverage long or buy back the Bitcoin you sold. And then once again, within that same 24-hour window, I saw this headline being spread all over the place. US government moves 10,000 Silk Road Bitcoin worth almost $600 million to Coinbase Prime, likely to be sold. And of course, market goes down a little bit and everybody starts panicking once again. And of course, it makes you want to be short-term bearish once you see this type of stuff being posted all over Twitter and YouTube. And then again, we're still in the same 24-hour window. You start seeing headlines like this one. Goldman Sachs holds over $400 million in Bitcoin. And we're seeing this with a lot of US institutions. And the headlines are always like, are you going to sell your Bitcoin to the bankers? How could you be bearish here? Look at all of these institutions buying Bitcoin. You really sold your Bitcoin to JP Morgan. But during the same 24-hour period, we keep getting these bullish and bearish narratives back and forth. And that's what results in this choppy price action that keeps wrecking everybody in both directions and even forcing more long-term oriented investors to make short-term decisions and mistakes. And as I'm sure you're all aware, this is why I like to zoom out and focus on multiple scenarios and just be prepared for multiple outcomes. You guys know my base case is still a normal cycle, but if we were to see some type of magical blow off top in the next few months, I would be ready for it. If we enter some terrible recession and go into the failed cycle scenario, I would be ready for it. And that's of course a result of having a more conservative portfolio. So the permabulls that are all in altcoins or leverage longing this market are going to significantly outperform me in some type of blow off top scenario. But then the people that are in those positions are going to underperform significantly if the top is already in and we're in a failed cycle scenario. So I like having a portfolio that can survive multiple outcomes. I don't need to make the most money out of everybody, but I also want to protect myself from downside, because if I were to follow these narratives and try to make short-term decisions based on sentiment or based on what my favorite person on Twitter or YouTube is saying, I would likely lose a lot of money during these choppy periods, and I would likely lose a ton of money if this scenario I wasn't betting on ended up playing out. And the funny thing is, this isn't even a crypto specific thing. We see the exact same thing in macro. For example, when we got that bad unemployment rate print and we see this very strong evidence that recession could be around the corner, all of a sudden everybody's panicking, saying it's all over and we're entering the next Great Depression. But then we get a good CPI print and all of a sudden everybody is bullish and celebrating and saying rate cuts are around the corner, as we see the market start to price in more Fed rate cuts, which of course is stimulative for risk assets and gives you a reason to be bullish. But then you realize that a lot of times we see the Fed cutting rates when the recession is already guaranteed and markets are already going down, which forces people to then say that rate cuts are bearish and rate cuts cause market crashes, which of course makes zero sense. And of course, just like those narratives that are crypto specific cause people to make mistakes and change their long-term strategy based on short-term ideas, the exact same thing happens in macro, because the hard thing about macro is timing. And even though we know recession is very likely, we have no idea when it's actually going to play out, and we have no idea how big the impact is going to be or how aggressive the reaction from the Fed is going to be, which is why I try to stay relatively conservative, but always have at least some exposure to assets I believe in, while still maintaining a decent sized cash position to survive those longer downtrends and take advantage of opportunities. And this, of course, brings me to probably my favorite investing quote of all time from one of the best investors of all time, Peter Lynch. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. And this is a mistake I used to make a ton. I always felt like I had to be all in bullish or all out of the market in cash because I was bearish. But a lot of times those corrections end up taking way longer to play out than you expect, and you miss a lot of the upside because you're waiting for that correction in the short term, or you start to believe all of the negative headlines that cause you to panic sell and get out of assets you believe in the long term, causing you to make those mistakes. And this is why expectations are so important. We said many times going into this summer that it's likely going to be choppy, like every single summer for Bitcoin, outside of those post-halving years of 2021 and 2017. And we also know that election years tend to be very volatile from July going all the way to November because of all the election uncertainty. So managing expectations and being patient during these very volatile periods is the best way forward, in my opinion, because even though there's a lot of concerning signs out there like the unemployment rate and the potential recession fears, there's also a lot of arguments for some bullish price action, like the type of deficits we're seeing run by the federal government and how they're using deficits to stimulate the economy, and how we're already seeing deficits 10 times larger than what we saw going into the great financial crisis. So the federal government is kind of getting ahead of the recession and using the deficit to fight what the Fed is doing with these elevated rates. And maybe that's why we're not in a recession already. So there's always bullish and bearish narratives out there, and we always have to zoom out and focus on the big picture. And as I'm sure a lot of you are aware, my favorite chart to zoom out and look at that big picture is this one here, and how we've seen an exponential increase in US national debt and M2 money supply, which of course we would expect to put quite an increase on risk asset prices over the long term. And I also like using this chart to capture that. You can see how in the pre-dot-com era, we had a certain rate of increase in debt, and then that became more aggressive post the dot-com bubble, and it got even more steep post the great financial crisis. And of course, post-COVID after 2020, the debt increase got even steeper. So even though there could be another crisis that causes risk assets to sell off, the only solution governments have as of right now is to print more money and issue more debt, which of course is bullish risk assets in the long term. So even though we could be seeing a correction from the S&P 500 here, which could impact Bitcoin's price action in the short term, we're still bullish Bitcoin in the long term because of what tends to happen with fiat currency and government debt. So for now, all we can do is wait and see. Bitcoin looks quite bearish in the short term as long as we're below that range we broke down below over the past few weeks or so. Really no reason to get super excited to the upside until that level gets reclaimed, but there's also no reason to get super bearish as long as we're going sideways and as long as we're in this Bitcoin summer chop period. So I would rather be patient and just see what happens and sit on my existing positions before making any rash decisions. As for the US dollar index, it is going down as the market is beginning to price in more of these Fed rate cuts. But of course, as we've said many times, we have been in this range for over a year and a half now. So unless we break out to the upside, which would likely be a risk off scenario, or break to the downside, which would be a risk on scenario, because that would be aggressive devaluation in the dollar, which of course is what we've needed for the past two Bitcoin mania phases. And of course, those also coincided with our past two alt seasons. But as of right now, the dollar index is still in a range and the Fed hasn't begun cutting rates yet. So I don't expect any type of major move for Bitcoin or any type of alt season until we see that aggressive devaluation in the dollar, which we haven't seen yet. As for Ethereum, still not really doing much. We saw a nice bounce off that 200-week moving average, as we mentioned, which you would expect after such an aggressive capitulation, but we're not seeing that great of a bounce so far. It is getting rejected at resistance as of right now, but of course, we're gonna have to wait for the weekly close to see how that ends up developing. And as for Solana, kind of similar, very nice bounce off the 50-week moving average in this case, but got rejected by the mid-range of its trading range of the past 6 months. And sellers are stepping in once again this week, causing that wick to the upside. So we'll see how the weekly candle closes, but we're not seeing a ton of strength from Ethereum or Solana right now. And that's likely because of the weakness we're also seeing from Bitcoin, which in my opinion is still trading right in the middle of what I would consider to be a fair value range. So we'll see what happens. We're of course definitely open to lower prices. I don't want to update the labels on this chart quite yet, but definitely the low 40Ks is a possibility now that we've gone as low as we've gone, but I'm going to keep the labels as is for now to try and keep some continuity on the channel. I'm very open to Bitcoin going this low, but we did hit kind of my minimum low that I wanted to see before expecting any type of upside. So of course we could go lower, but it's not guaranteed in my opinion, because there's so many different things that can happen over the next few months. But of course, we're still very bullish Bitcoin in the long term because of the currency devaluation and debt expansion we spoke about earlier, the same way we're bullish the S&P 500 and general risk assets in the long term because of that same concept. So for now, we'll see what happens. Expectations are still quite low for the rest of the summer and going into all of that election uncertainty in November. And just try and keep in mind that there's always a bullish narrative every time price bounces to make everybody FOMO and be bullish. And whenever price goes down, there's always a bearish narrative, making everybody concerned, making everybody very anxious, and causing a lot of even long-term investors to make mistakes. But anyway, let me know what you expect. Will the rest of the summer be good for Bitcoin or bad? Or will it just be sideways chop like we're expecting? Would love to know what you guys expect as always. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.